do your first real estate deal and look and learn from it, right? Look for a good property to invest in. But if you don't even do that,
Are you considering making a real estate investment? Whether you feel it's time to move into a larger home or simply want to have a solid investment for the future, all real estate investors face the problem of not knowing what all they should consider before investing their money in this market, which is why we're here to help you with the top things you must know before investing in real estate today. It's all about real estate, an ever-expanding market that has historically provided excellent returns to its investors. An industry that has previously existed in the shadows of the stock market has suddenly emerged and carved out its own place. According to reports, roughly 70% of all investors put their money into stock market in 2007. With the boom in the real estate market and the high return on investments, that number dropped to a shocking 48%, as many of these investors realized that while a stock might give you a 5% annual return, the real estate market can yield some great returns on investments if money is put in the right place at the right time. I'm sure that now that you've heard about all the wonders that real estate can provide, you're curious to learn more. But first, let's start with a question. What is real estate? Property includes water, trees, minerals, buildings, residences, fences, and bridges, as well as any permanent improvements to the land, whether natural or man-made, such as water, trees, minerals, buildings, dwellings, fences, and bridges. Real estate is a sort of real property. Vehicles, yachts, diamonds, furniture, and farm equipment are examples of non-permanently attached personal property. According to Investopedia, real estate is defined as the land along with any permanent improvements attached to the land, whether it is natural or man-made. Real estate can be used to make money in a variety of ways. In many circumstances, you may either sell the land years after you bought it for a much greater price, or you can rent out your property to renters and earn a consistent monthly income. Let's move on to the top 9 things you should know before investing in real estate now that we've established a solid basis. Number 9, property location. Why is it important? The cliche, location, location, location is still true and remains the most crucial aspect in real estate investing performance. Residential property assessments are heavily influenced by proximity to amenities, green space, attractive views, and the neighborhood's standing. Commercial property valuations are heavily influenced by proximity to marketplaces, warehouses, transportation hubs, freeways, and tax-free zones. What to look for? The mid to long-term vision of how the area is likely to evolve over the investment period is critical when evaluating property placement. Today's tranquil open ground at the back of a residential building, for example, could become a noisy manufacturing site in the future, lowering its value. Examine the ownership and intended use of the immediate locations where you intend to invest thoroughly. Contacting town hall or other governmental bodies in charge of zoning and urban planning is one way to learn more about the prospects in the area of the property you're considering. This will provide you access to long-term regional planning, allowing you to assess how favorable or unfavorable it is to your own property plan. Number 8, valuation of the property. Why is it important? Property valuation is vital for financing during the acquisition as well as listing price, investment analysis, insurance, and taxation. They all depend on real estate valuation. What to look for? The following are some of the most commonly used real estate valuation methods. Sales comparison approach. The most popular and appropriate technique for both new and old homes is to compare recent comparable sales of properties with similar attributes. Cost approach. Land and construction costs minus depreciation, ideal for new development. Income approach. The income strategy is based on predicted cash inflows and is ideal for rental properties. Number 7, investment purpose and investment horizon. Why is it important? Given the tight liquidity and high value of real estate investments, a lack of clarity on intent could result in unexpected consequences such as financial distress, especially if the property is mortgaged. What to look for? Determine which of the main categories below best fits your needs and then plan accordingly. Buy and self-use. You will save money on rent and have the benefit of self-utilization while also increasing the value of your property. Buy and lease. This provides consistent income as well as long-term value appreciation. However, a landlord's temperament is required to handle potential disagreements and legal concerns, as well as supervise tenants and repair work. Buy and sell. Short-term. This is usually done for a short, modest to medium profit. The typical property is under construction and then sold at a profit when it is finished. Buy and sell. Long-term. This is usually centered on a big increase in intrinsic value over a long period of time. This provides options to complement implement long-term objectives such as retirement. Number 6. Expected cash flows and profit opportunities. Why is it important? The amount of money left over after expenses is referred to as cash flow. A decent rate of return on an investment property depends on positive cash flow. What to look for? Make profit and expense estimate for the following profit and expense models. Rental income expected cash flow. Inflation favors landlords for rental income. Long-term price appreciation is expected to boost intrinsic value. Benefits of depreciation and available tax benefits. Before selling, do a cost-benefit analysis of renovations to acquire a better price. Cost-benefit analysis of mortgage loans versus value appreciation. Number 5. Be careful with leverage. Why is it important? Loans are easy, but they can be expensive. You pledge your future earnings in exchange for utility today at a long-term interest rate. Make sure you know how to deal with these types of loans so you don't end up with a lot of debt or what's known as over-leverage. In times of bad market conditions, even real estate specialists are confronted by over-leverage, and liquidity constraints combined with excessive debt commitments can derail real estate ventures. What to look for? Consider the following options based on your current and predicted future earnings. Choose the sort of mortgage that best suits your needs. Fixed rate, adjustable rate mortgage, ARM, interest only, zero down payment, and other types of mortgages are available. It's important to remember that each kind of mortgage has its unique risk profile, which you should research thoroughly. For example, an ARM includes mortgage rates that are subject to fluctuation at any time due to capital market pressures, and the borrower must accept any rate adjustments during the term of the loan. Make sure you understand the mortgage lender's terms, limitations, and any charges. Shop around for better terms and lower interest rates. Number 4. New construction versus existing property. Why is it important? New construction typically has lower prices, more customization options, and more modern facilities. Delays, higher expenditures, and the unknowns of a freshly developed neighborhood are all risks. Existing properties provide convenience, quicker access, pre-existing amenities, utilities, landscaping, etc., and in many situations, reduced pricing. What to look for? When picking between a new building or an existing property, keep the following in mind. Examine previous projects and look into reputation of the building company when it comes to fresh investments. Examine existing properties, deeds, latest surveys, and valuation data. Take into account monthly maintenance fees, unpaid dues, and taxes. These kinds of expenses can wreak havoc on your cash flow. Find out if the property is rent controlled, rent stabilized, or free market before investing in leased property. Is your lease about to end? Are the tenants' renewal alternatives favorable? Who's the owner of the furniture? If things, furniture, fixtures, and equipment are to be included in the sale, be sure they are in good condition. Number 3. Indirect investments in real estate. Why is it important? Physical property management over a long period of time is not for everyone. Alternatives exist that allow you to indirectly invest in the real estate market. What to look for? Consider these additional real estate investment options. Real estate investment trusts or REITs, real estate company stocks, real estate sector-focused mutual funds and ETFs, mortgage bonds, mortgage-backed securities or MBS. Number 2. Your credit score. Why is it important? Your credit score has an impact on your ability to qualify for a mortgage as well as the terms offered by your lender. If you have a higher credit score, you may be able to acquire better terms, which can save you a lot of money over time. Discrimination in mortgage lending is against the law. There are actions you can take if you believe you've been discriminated against because of your color, religion, sex, marital status, use of public assistance, national origin, disability, or age. A report to the Consumer Financial Protection Bureau or the U.S. Department of Housing and Urban Development is one such process. What to look for? Scores of 800 or more are considered good and will assist you in obtaining the best mortgage. Work in boosting your credit score if necessary. Set up automated payments or reminders to make sure you pay your bills on time. Pay off your debts. Aim for a credit usage rate of no more than 30%. If you're not paying annual fees on your credit cards, don't close them. Limit new credit queries and hard inquiries. Examine your credit report for errors and file a dispute. Number 1. Overall real estate market. Why is it important? Buying low and selling high, as with other forms of investments, is a solid strategy. Real estate markets fluctuate, so staying on top of them is a good idea. It's also crucial to keep an eye on mortgage rate in order to cut your financing costs as much as feasible. What to look for? Keep up with the latest trends and statistics in home prices and home sales overall and in your desired market. New construction, property inventory, mortgage rate, flipping activity, foreclosures. Well then, now that we've covered the top 9 things you need to know before investing in real estate, let us know in the comments below if you will apply these tips and tricks before investing in it. Apart from that, we'd really appreciate it if you could leave a like on this video so that more real estate enthusiasts such as yourself can see our video and subscribe to our channel. Done? Good. With that, we'd like to sign off for today. Have a good day and we'll see you soon.